Hello, everyone. Thank you for joining me for another episode in the Dealmakers Series where I'm interviewing some of the top deal makers in DFW. Today, I'm joined by Mr. Dane Harris. He is a partner at Bennett Thrasher. Dane, thank you, sir, for joining us. Give us a little introduction on yourself and what you do at BT.
Yeah, thanks for having me, James. Honored to be here. Yeah, like you said, I'm a partner in Bennett Thrasher's transaction advisory group. More broadly, I lead our Dallas office. Stepped out and founded the office in 2021, and we've kind of been growing it organically ever since. Bennett Thrasher is a classic public accounting firm, so we have all the audit and tax services that you can imagine, but also many specialty practices as well. And you mentioned I work in our transaction advisory group, so we're working primarily with private equity and other types of sponsors to look at mostly buy side transactions, but also on the sell side with business owners. And we've got 35 plus individuals doing this full time in this group. So we got through about 160 deals last year, and we'll expect to likely eclipse 200 deals this year. So pretty sizable group, and been well received by the market, and yeah, just out there looking to make it happen on the deals.
That's awesome, man. I'm glad to hear that you're looking to have a positive year this year. Some of the folks I've talked to, it's kind of a mixed review, honestly. Some are doing more business, some are doing less, and so I'm glad to hear someone's planning to do more. That's awesome to hear. So, and that kind of swings right into it. How would you describe the current state of M&A and deal flow and such here in DFW or Texas? How would you describe that?
Yeah, I mean, take it more broadly before we kind of dive into the Texas specific climate, which I think can be a little bit more robust and a little different than the rest of the country. But we've got offices in Atlanta, Dallas, and Denver. So I think we get a bit of a different flavor, and the different markets have different strengths, right? So in the Southeast, I think you see a lot more strategic acquisitions and less kind of equity sponsors or financial sponsor driven. And we found that can run somewhat countercyclical to the financial sponsors. Here in Dallas, obviously, we've got an amazing community of all different types of financial sponsors. So it's a robust market. I think for us, as we've grown over the past 3 or 4 years, like I mentioned in the intro, we never really had a slowdown. I think the market more broadly did slow down, but kind of as we've expanded and grown organically through word of mouth and just serving clients and their networks as well, we never really experienced that slowdown that I know many others have experienced. I know even some of our clients said that they had more of a portfolio management year last year, which would be kind of more about like, hey, let's optimize what we've got. Let's work on processes and so forth, and maybe not do as many. Maybe we did some add-ons, but not as many new platforms. This year, certainly, though, even without seeing that slowdown over the last couple of years, we've seen a huge pickup, right, in just the backlog and the speed at which deals are turning and the urgency of which things need to be done. So I always joke that it's not quite, post-COVID 2021 times this year, but it's more in that direction, I guess, than it has been the last several years.
Interesting stuff. So I've heard a lot about the last year or so has been more heavy on add-ons than platforms. Are you seeing the same, or are you seeing different?
Yeah, I think that's fair. I think that's fair that there were probably more add-ons over the past, let's say, year to 18 months. But this year, I think there are definitely platform investments back in play. And I would say also working on the sell side that I think that's loosened back up, right? So I think when you were coming out of 2021, I read on the situation, it's always hard to pin down exactly what's going on, right? Because it's a dynamic market and there's so many different things that influence it. My read on the situation is that, coming off 2021, multiples were pretty frothy, right? They got driven up pretty high. And then you had the interest rate situation that began, probably when was that, 2023. And so that impacted valuations as well. And I think what you had were sellers that kind of longed for the day of those valuations that they heard about in 2021 and thought that they, wait that out and see if that comes back, and maybe it will. And I think now you're starting to see a little bit more of that. Maybe the political climate has provided at least some certainty on kind of what the policies may look like over the next 4 years. The interest rate situation, although they haven't come down a whole lot, they've stabilized, right? So at least we know that, hey, we're not raising still. Inflation has come down and allowed there to be a little bit more certainty, or at least it's a little bit steadier, right? And then I think all that kind of rolls up into the stability is providing for more deal flow, and sellers are coming back to the table. So I think just given with that kind of seller viewpoint and what we've seen from our clients, that yeah, I'm pretty bullish that the financial sponsors are looking to make platform investments again, and it won't just be kind of fully driven by add-ons this year.
That's good to hear. That's really good. Some of the census has been that it'll be another wait and see year. So hopefully that won't be the case. How is the current climate with interest rates and now tariffs impacting deals?
Yeah. So, I mean, the interest rates we briefly just touched on, and I have to say that, in the financial diligence space, when we're doing transaction advisory, the valuations of those deals is never as much the focus as really kind of the quality of what we're looking at in deals that have already been signed up. However, the tariff situation is a really interesting topic because that definitely does weigh into kind of what we're looking at in our sandbox, right? So we've certainly had already this year 2 or 3 deals that have been impacted by the tariffs. And like I just mentioned on the interest rates, not necessarily that it was a major deal issue, but that it was an uncertainty that adds to kind of the structuring around a deal and makes it maybe a little bit more difficult to get deals done. So obviously, anybody that's got any company that has a vendor list that's sent, importing items, right? So any retail companies are dealing with this right now, or a large majority of them. And we do a lot of manufacturing work as well. So depending on kind of what metals we're talking about and where the materials are coming from, that's a topic, right? And it impacts the deal in a variety of ways. Obviously, the buyers are interested in knowing if this cost is going to be able to be pushed on, or if you have a market that maybe is super inelastic that won't be able to absorb those price increases. Your competitors, right? How does that break down? Are they going to be in the same boat where kind of everybody's going to be dealing with the same issue, or is it unique to the business that we're looking at here? Um, there's a lot of different dynamics here. Inventory levels, right? Like, so how will it impact working capital if we're having to carry this 25% tariff or higher in inventory for an extended period of time, right, before we can sell it through? So all of those are questions that we're grappling with right now, and I think that it's different even than the last round of tariffs, and that kind of the stakes have been raised, right? Last time was primarily targeted with Chinese imports, and this time I think it's more fulsome with a lot of different countries being named. So certainly a major topic this year.
Yeah, for sure. I think at the time of this discussion, we're a little bit further into this whole tariff unrolling. And earlier this year, when I started talking to people, it was more of a, we haven't really seen anything yet. It's a lot of negotiation tactics. It's probably not going to happen, stuff like that. I think now it's shifting a little bit, and we're still barely just getting into it.
Yeah, I mean it's definitely tough. There's been like an on again, off again dynamic to it, and it's difficult to plan for that. Like we just mentioned with the interest rates, I think what level the interest rates ultimately settle at is not as important as stability and predictability. And it's the same thing with the tariffs right now, is when they're on one day and then a 30-day reprieve and then they're off and then back on. It definitely makes it difficult to nail that down. So we have seen quite a few deal processes this year already taking a wait and see approach on deals that are impacted or potentially impacted by tariffs.
Yeah, for sure. It's a moving target. Let's shift a little bit toward the capital stack and some of the trends you're seeing there. I know that private credit has been on the rise here in the last year or two. What are you seeing? How is private credit stacking up against private equity or any of the other sources of financing?
Yeah, I mean, from our perspective, like I mentioned earlier, kind of the sources of the capital and kind of the valuation points are kind of less important than what the work that we're doing in the diligence and making sure that kind of our clients know what they're looking at and know what's driving these businesses. So we have seen quite a few deals that are back that are going the credit route, the private credit route, but we've also seen, like I mentioned at the top of the call, robust equity investments as well. I mean, obviously, we love our clients on both sides of that equation. And look, I think as deals have gotten a little bit harder to close and valuations have gotten a little bit tighter over the last few years, there's certainly a role to be played both for private credit and equity. And I think that's what we're seeing is maybe more creative solutions, more deals than you would have seen a few years ago. But yeah, I mean, I think there's certainly room for both.
Yep, yep. And so, where would you say you or your clients are finding the most value? And that can be in deal structure or partners or region, anything that you're seeing trend wise this year, or even kind of at the tail end of last year.
Yeah, I mean, I think a lot of our clients, James, are they're all from all shapes and sizes, right? But I would say like traditionally we work with middle market operators essentially, and so a lot, and perhaps that's why we didn't see as big of a slowdown as maybe has been discussed more broadly at the top end of the market. But our clients typically are able to get in there and operate the business, and they kind of understand moving in, and hopefully we play a part in helping them understand that with really not just what the EBITDA number is, but what's under the hood here and what's driving kind of what levers need to be pulled to improve the operation of this business. And then they have kind of a clear-eyed view on if they've got the capability to do that, right? And that's part of the investment decision. So I wouldn't really define the value maybe that we're seeing in terms of a particular market or a particular industry. I would say our clients have really been very skillful in taking businesses and taking deals that maybe have a little bit of hair on them at the beginning and working through that, like I mentioned, hopefully hand in hand with us, and then being able to kind of take those findings out of our work and say, like, look, 1, 2, and 3 definitely need to be cleaned up in this business. But once we're able to do that, then you've got some sort of synergistic ability to scoop value. And so I would define it more like that, like, in looking at businesses that maybe are a little bit more difficult to figure out and not as clear cut, where can they add value? That's really what we've seen as far as like the very successful deals that we've worked with.
I like it. So, last question. What makes DFW or Texas unique versus all of the others?
Yeah, I mean, I think you can take that so many different ways, right? Like, I mean, we live in a very unique area, and it's all positive. I mean, I tell people when we're interacting with clients from around the country or other firms or law firms or whatever the case may be. I mean, DFW is just a rocket ship, and I think we all are very proud of that and should be very proud of that and the roles that we're individually playing in that. But past that, I mean, I think we've got just a heritage here in this area, all the way back to the oil field days that are still alive, right? That there's just a little bit more. It's just a wild west kind of entrepreneurial environment, and really anything I think in Dallas is still possible. And I think that's attracted a lot of capital. It's attracted a lot of entrepreneurs, business owners. And I think that's very unique. You don't see that in every market in the country, right? There's this almost innate optimism with the deal community in Dallas, and I think that's a really unique and awesome thing.
Yeah, for sure. I think I've been here for 20 years, and I think that's definitely the case too. And a lot of the folks I've interviewed this year too have kind of echoed that sentiment. Dallas, in particular, is just a very different place. Texas, as a whole, is very heavily built on relationships, and that's kind of the thing that separates us. Where you know deals are made with people who, on both sides of the table, they really know each other, and they found a lot of common ground and synergies and ways to help mutually. So
100%. Yeah, I couldn't agree more.
absolutely, Dane. I appreciate your time. I appreciate your insights. I think we're due for a great year ahead. For those of you watching, if you found this useful, you can find more of these interviews on my website at jamessaki.marketing, and you can find the rest of these full-length interviews exclusively on YouTube. Thank you for tuning in.